All right. Okay, I see there's 2 more messages. Okay, yes, we're together. All right, so far so good. All right. Okay, so we're still here. In addition, a currency market advanced, in a different way, right? Let me move around my laptop. I think there's something that I'm not. Yeah, here we go. Better. All right. So I was saying, in addition, the currency market advanced in such a way that the price cannot be able to predict. The scientific theories should be used in the question and only in conjunction with other methods, right? I hope we are together on that. Now we're jumping in the next slide. A double top and a double bottom patterns. So a double top and a double bottom patterns. What are double top and a double bottom? Is there anyone who actually have the simple explanation? And when it says the double top, what letter does it show on a double top? And on a double bottom, what letter does it show? Does it form on a double bottom? Is there anyone? Just a symbol of letter. You can say that maybe it form a G, or it form an F, or it form and a B. What type of letters, guys? Anyone? All right, no problem. Let's move on. All right, we're here. So the double top patterns, which are also called the M. Remember, the double top, M. One top, come back, another top, drop down. You got me? A bigger candlestick or a bigger trend forming from the bottom all the way up, turns from somewhere on top. It didn't go all the way to the bottom. It just come back from somewhere in the middle. Forming again, goes all the way and turn where it turns before, and goes all the way back where it started. That's an M. That's a double top. There's 2 tops on top. So it forms an M pattern, initially formed by a long rise in a trading price. The shape then continuously with the 2 tops separated by a very big before terminating the significant of a drop in the trade price. So the double bottom also patterns are referred as the W, same as the M, upside down, as referred as a W patterns, and commence with a drop in a currency price, followed by a 2 bottom separated by a hill, right, and ending with a sharp price rise. The main characteristics of top and the bottom patterns are the one of the following. The tops and the bottoms are significant reversal pattern that usually mark the end of the long-term price trade. So imagine a signal or a sign that tells this is the end of the long trade. If it ends, it means it's going to turn back and goes all the way, positive way, goes to the direction where it's coming from. So I think to have such a strategy, such a pattern with you, and understand this double top, double bottom, you'll be able to make some money in the market. To avoid to lose, it's better to make something small than losing something. Some people, they've been in a market, but they always lose. They always catch up with the loss. It's because of we don't necessarily know where we can enter the market. We just get in the market and enter the market and then try to trade, try to predict where the market is gonna go. All right, ladies and gentlemen, there's 10 more minutes left. But as I always say, after 10 more minutes when it cuts, let's join again. Today we don't have a long, presentation. It's very short because there was an NFP. It's very short. And again tomorrow, I'm having face-to-face seminar at the office. To those who stays around, Johannesburg, that they can come in Sandton, they are most welcome. To those that they cannot be able, I'm gonna be able to send the link. It's either tonight or tomorrow in the morning, so that you can stream it live, like what we are doing when I'm actually teaching the other guys who are coming face to face tomorrow. All right. So there's something called the triple top bottom patterns, right? Triple now. These ones were double. Now we're talking about triple, something that forms 3 times, right? A triple top is a currency trading pattern where the price rebounds off the level 3 times and is very strong indication of a powerful resistance level. Strong indication that it's not gonna go all the way up. Now it's a lower trade. This is actually works mostly on the currencies, because when it comes to currencies, we are talking about between one currency of money, one specific country and to another. So which one is going to be powerful there? It's easier to trade the currency when you are, than when you are trading the indices, because this one you are actually trading the currency, the money between one country to another. You're going to notice which one is a powerhouse on that, right? So similarly, the triple bottom patterns occur when the price detracts from its support level 3 times, which again indicates a condition of very strong buying interest. We together so far? So good? All right. Definitely we are. Definitely we are. All right. So let me just go on a chart so that we can show you. I can try to find something that I can show you about triple bottom, and again the double, the double top and double bottom, so that when we're talking about this, we can see also these things on a chart, not just talking on a words on the messages, but we can be able to see it on a chart as well. So okay, let me look at Gbp Jpy. Looking at the Gbp Jpy on a daily time frame, right? Here it is, ladies and gentlemen. This is the day time frame. This is actually a proper indication. On top, right? It's forming an aim now. From here, all the way goes up, all the way comes down, all the way goes up, right? It tried to come down to form an aim like this one, but it fails. What is it going to do? It's going to now to try to form a triple top. Now it's going to be 1, 2, and the third one somewhere here. If you are a trader, someone who actually execute the long trader, this is your position, ladies and gentlemen. You can actually trade from this position. Pretty much, maybe it'll go from here. Let me just do this, and let me just do this. All right, here we go. This is what I'm thinking it might be done, right? So think about this pattern. It goes all the way here. You are catching it from this line, from this one. You are catching it from there. You are estimating it to come all the way down. But this is the daily time frame. It's actually huge time frame. That means anytime soon, the Gbp Jpy, the Great British Pounds, they're gonna get tired of buying, and it will come back. And when it will come back, it's gonna need to come all the way to this level, right? To this level. So let's move to the smaller time frame, and let's look at it what currently is doing. If you look at it at a smaller time frame, already it start forming the tired of the market, that it's been bullish for some time. It's actually exhausted and trying to start dropping. So it's not going to drop at once. It's going to now play around at the same position at the resistance, play around at the same position to see, actually to take it out even people that they don't have enough money to hold this trade. So we can even go to 1 hour. In hourly, already it's 10. But on a daily, if someone who has enough money put a nice lot size, you can actually sell the whole thing. You can make so much money for this pattern. All right, let's jump again to another maybe type of instrument. Let's look at AUD/USD. AUD/USD is sitting at 15 minutes. We go on a bigger time frame. Always you start with the bigger time frame. Weekly, let's check on weekly. Weekly is those that they have good money, right? If you don't have good money, let's not put on weekly. Daily maybe, right? Daily. So let me do this and here. All right, I want to show you from 16 August. It goes all the way up, come back, goes all the way up, forming the double top, and then shoot all the way down. After it forms here, it indicates that the sell or the bearish, it's going to be a very, very strong bearish movement. Shoots all the way coming down here. Now let's pull and see what exactly happening at the current moment. Now the trend has finished. You don't consider this double top for after the trend of a sell has finished. So this double top has been formed, it's done, it's finished. It's gonna have to form again maybe in the past days that are coming in future. But look at now, it's forming again the M, cave from this side, cave down, it's caving again. Here you will see maybe a few more candlesticks, they will start going all the way up, and then it will cave again down. When you look at the small time frame, it caves up, goes down, it's gonna have to cave up. Once it goes all the way down here to this point, now it's forming a double bottom, because there will be a bottom, there will be another bottom that will have to form to go all the way up. Now it's going to be a W. 1, 2, a bottom here, goes all the way up. Imagine you put your pending order, and your pending order you are putting here. You say that I'm putting a buy pending order at this position at 0.69876. Once it get here, it must trigger a buy. You will see it will come all the way this trade, reaches this moment, and it triggers your pending order shooting up. You put your take profit here. Put your take profit here, so that when it triggers your pending order, goes all the way up, you take the profit. Then you go to work. You go to do anything else, whatever that you do. Later on, you come check your account. Realize that your account already, there's money that you are making on your account. Everything is fine on your account. The trade has been closed already. You don't need you don't need to close the trade on your own. So these are one of the strategies that you can now be able to analyze and to not have a pressure of looking at the chart all the time. You can now be able to say that this is where I'm putting the pending order as a buy. I'm going to put my take profit here. I'm going to put my stop loss. So if it in this way, let's see where we can put a stop loss. All right, weekly, let's go to a little bit higher time frame. All right. Okay. Now, if it is in that case, we go to a weekly, and weekly is a very big time frame. So if you don't have enough money, make sure you put it very closely as a stop loss. Now, this is not too close. This is very big because this is a week time frame. Let's look at it. All right. Sorry about that. Thanks for tuning in again. All right. As I was saying, I was actually emphasizing about where you can put your stop loss. So look at it on a weekly. This is really far. Maybe we can even squeeze it a little bit more upper. Here, this candlestick. Yeah, that looks pretty much better. Right? It's the end of this, a hammer that forces down. Put it there as your stop loss. Check it on a daily time frame. Realize you're still good on your chart. So even if it goes all the way down, you still have your stop loss under there, but it won't resist just playing around and the same time touches your stop loss. No, it will actually gives a little bit of a breathe so that it can be able to resist it properly, and then it go back to the position. So pretty much this is what we what we are talking about. I don't know so far any questions regarding what we're analyzing. Any questions so far? So far so good. All right, so far so good. Let's finish up the last take that we have for the session of today. Okay, here and then we are here. All right, so there's another also analysis called the head and the shoulders pattern, right? The head and the shoulders pattern. So these heads and shoulders pattern, they move along with the top and bottom, triple bottom or triple tops. They move along on those sides. It's the same type of pattern that gives you the same type of analysis when you are trading, to know where to enter, where to put a take profit, and where to put your stop loss. The top and bottom, if you can see the chart here, the top left shoulder, a header, a right shoulder. So a header goes up, shoulders on the middle, right? Left shoulder, right shoulder, a header. So let's go through what it says. Then we know a head and a shoulder pattern is formed by a three peaks. The central peak or a head. It is slightly higher than its two lower and not necessarily a symmetrical shoulders. The line joining the bottom of the two shoulders is called the neckline. The neckline. So this is the line that join with the two shoulders. This one on top to this one, the neckline. The line joining from the bottom of the two shoulders is called the neckline. The neckline is relying on the symmetrical of the perfectly horizontal because of the price fluctuation. So because of price of moving around, fluctuation from down to top, that's where it formed the neckline, the line that you are seeing there. All right, this pattern is again a strong reversal signal, and it is not complete until the neckline is broken. So until this line, the neckline that is being drawn here, it breaks, that means you are now at a very, very reversal strong point. So look at the line, how it shows how it's been falling from the neckline. So you go on a chart, go on a bigger time frame, look at this, look where it was. Did it form the shoulder, come back to the neckline? Did it goes all the way and form the header and come back to the neckline and form the shoulder again, right? The only thing that you're gonna wait, it formed everything, is the candlestick to break this neckline. Once it breaks this neckline, you must know all the way it's a sell. So right shoulder lower than the head, but higher than the left valley, right? The neckline drawn by the connecting left and the right valley break of the line confirms the pattern. So once it breaks, it confirms the head and shoulder pattern. Are we together with the head and shoulder patterns? Head and shoulder patterns. All right, we're good. We need a little example. Let's check it out. Maybe we can see the little example on a chart. my chart. Which one can you check? Gbp Jpy. Already, already check it out. This thing, USD Chef. Okay, USD Chef has been volatile today. It's crazy, crazy market, crazy market. All right, this is another good example, right? Okay, when you put it longer, here's another shoulder, goes all the way down and pull back from the head. The head is actually above this one. Now, if these candlesticks is going to turn somewhere around here, where I put that red line here, turn back, that means this one is confirmed as a header. What you need to do is to draw the line from the bottom here all the way to the bottom of this one, the one that the red line, like the one that I draw. So now once it turns and touches, breaks this line, it's a confirming that it's going to be very, very strong sell. In that case, if you sell that sell, you're going to make a lot of money. Did you see it? Did you check it out? Shoulder all the way down from the header, coming back on the neckline. This is the neckline. It's going now to form another shoulder. Once it comes back and touches the neckline, it means it breaks the line as a bearish. The bearish is going to be strong. The money that you're going to make there, you're going to enjoy it yourself also. You're going to realize that, hey, no, this analysis is actually helping. All right, okay. So, all right, let's finish up with the presentation. So we are here. All right. Now here comes the V pattern. This is one of the things also, that pattern that formed in a market as well, right? The V pattern. You can even see the neckline. There was a shoulder on top. Now we're talking about the V pattern. So anything that happened on top here, it should be the shoulder, header, and the shoulder. Breaks, forms the V pattern here, right? Right. So what are the V pattern? The V pattern is an unusual pattern in that a shape trend switched from one direction to the other without warning and with a higher volume or just after the turnaround. A trend reversal offers some of the most important opportunity for entering the market with a good profit potential, right? They usually represent the fundamental changing in the underlying the characteristics of the particular market and often go on to the yield big moves, right? So they are actually usually interpreting the fundamentals of the market, right? When it comes up, when we talk about fundamental, I think we all know, we talked about last week, we are talking about the news, what has been happening on the news. So most of the news, you see the reversal pattern. Pull all the way back, reverse, pull all the way up, straight up, shoot up, reverse a little bit, shoot up, right? If you see this type of patterns in the market, that's where you should know that this is the V pattern. They usually, remember, represent the fundamental changes in the underlying characteristics of the particular markets, right? The trend reversal offer some of the most important opportunities in our market. All right. I think I'm really close. I'm at the end, at the bottom of our presentation today. It's actually 1:05. It was 1 hour. I think we enjoyed it. So in summary, developing a trading method to enable you to successfully detect a top and a bottom can be very profitable activity, and as such is well worth your time studying. So let's continue studying on the top and bottom, Google about it, check on the YouTube about top and bottom videos. Let's understand more clearly. If you do have questions, I'm available on WhatsApp. You can, contact me on WhatsApp and to see how we can assist each other. This is the end. Any questions so far? The presentation, don't worry, it's been recorded. Definitely the records are always, upload them on YouTube. The name of the channel is the Daily Money Market. The Daily Money Market. That's where you're gonna go. All my videos. Again, I do send the link to everyone if they wanna check it out, or subscribe. And I do send the PDF if you wanna go through what we've been doing. There's no problem at all. This is what we do each and every week. So any question? It's 5 o'clock. All right. So far so good. See, so far everything is good. All right. So I would like to thank you. Thank you, Mr. Mapia, for joining in. Mr. Lucas, Mr. Obvious, Sponisu. There's a gentleman with the Galaxy Note 8 there. There's some other guys also, they couldn't join in after it cuts. So, it's okay. They're going to get the presentation via the PDF. So thank you very much for tuning in. Let's do it next week again. Remember, tomorrow is the Zoom seminar. And I'm streaming it live on that seminar. You can catch up starting from 11 o'clock in the morning all the way to 2 o'clock, 11, 12, 1, 2, 4 hours directly. This is where, we can share the ideas, share the knowledge, and make sure that we get in the market and start making money for ourselves. It's very easy to trade, ladies and gentlemen. Anyone, I do believe they can be able, to trade and start making money. All right, in that case, bye-bye. See you next week. Bye. In that case, I'm done.